Welcome back, everyone. Today, I'm going to give you 5 reasons why real estate investing is better than investing in the stock market. Let's jump right in. Number one, real estate is easier to learn. Warren Buffett famously said that diversification is protection against ignorance, and also to never invest in a business you can't understand. The way I see it, investing in companies you don't know anything about is way more risky than buying $1 million apartment building. Now, I want to know exactly how something operates before I sink mine or investors' hard earned cash into it. It's a lot easier to learn about one industry like real estate than it is to learn about every single company you're going to invest in or every single company included in, say, a mutual fund. Therefore, real estate wins this category. There's also a ton of free education on real estate these days. Take this video, for example. It's costing me money to put this together, but I believe in this so much that I'm willing to take that cost. The internet has brought the world's cumulative knowledge and placed it conveniently in your lap. I consider myself to be risk adverse. I don't feel comfortable investing all my money in companies that I'm not intimately familiar with. Moving on to number two, use of leverage. If you decide you want to invest in most traditional cases, you need 100% of the market price to buy gold, stock, cryptocurrency, whatever. If you decide you want to invest in real estate, you can structure the deal so that you can buy a property with as little as $0 out of your pocket. Imagine buying a $100,000 house for $0. Creative real estate is only limited by your ability to think outside the box. Sophisticated stock investors are screaming options. But if you buy stock market options, you're going to have to watch the market constantly to find the ideal time to buy and sell. That's not really how I want to spend my time. My goal at Banner Capital is to curate passive income for folks, not more work. Furthermore, if you're invested in multifamily syndication, say, your tenants are going to pay the remaining equity by paying down your mortgage. They'll pay for all the operating costs as well, like repairs and maintenance, vacancy expenses, etc. I don't know of a way to do this with stocks. Number three, forced appreciation. Here's where things start to get really fun and set themselves apart from the stock market. Real estate is a very inefficient market. This means that not all information relevant to the market price is known by both parties. If you know something is undervalued because of a certain reason, say the tenants aren't paying rent, or you could renovate and raise rents, you could reduce expenses, whatever it is, you want to be able to force that appreciation. The purchase price of a piece of real estate is settled by a meeting of minds to go through that transaction. In other words, everything is negotiable, which is number four. A buyer could say, I'll pay you X for your house. Sellers could say, I don't really like X. How about you pay me Y and I'll replace the roof? Deal. That doesn't happen in the stock market. Everything is buying stocks. Everyone that has buying stocks has the same exact information as you do. So there's really no way to buy below market value, at least not legally. The point here is that every successful real estate investor realizes that real estate is all about solving other people's problems. Common real estate problems can include like a landlord that's just tired, or heirs that inherited real estate through probate and just want to get rid of it, or a property falling into disrepair. Any of these situations can provide an opportunity to buy below market value and realize gain immediately. Additionally, you can further increase this by forcing appreciation, which we talked about earlier. With stocks, you have no control over how the company you own a share in is run. You can't fire the CEO like you can evict a tenant. As a shareholder, you can't improve a product like you can a rental property. Finally, number five, and my favorite section, taxes. Now, I'll caveat this section by saying you should really consult an accountant before making investment decisions, but in general, real estate provides some of the best ways to shelter your income from taxes. That's not a surprise. First, income from properties is passive. And I don't mean passive as in like you don't have to do anything for it. Passive, according to the IRS, means you don't have to pay Social Security and Medicare taxes on it. That's 15.3% less that you have to make with passive income than with active income to result in the same amount of take home pay. Being a lazy person, this sounds good for me. Second, real estate provides more ways to decrease your taxable income. Through various deductions and financial wizardry, it's not uncommon for landlords to pay zero taxes on rental income. For syndicators, this gets even better with things like cost segregation studies and bonus depreciation. Third, with 1031 exchanges and all benefits for real estate investors in the tax code, you can defer or eliminate capital gains taxes when you sell your investment real estate. Ultimately, the choice to invest in real estate, whether passive or actively, is yours to make. And I can only show you the reasons why I love it so much. If you look at this, not even including the returns. The real estate market blows the stock market out of the water, but that's for you to decide. As always, if you have questions or want to learn more, reach out today. Head over to www.bannettcapital.com and you'll find a way to get in touch with me there. Thank you.